So about a week ago I made a video sharing my thoughts on why VeChain could well achieve gains of between 50 and 100 to 1 over the coming years, and I received a lot of engagement in the comment section of that video, and actually one of the questions which kept appearing again and again was that with cryptos like Dogecoin and many other smaller cryptos pumping gains of 2, 3 and 400%, perhaps even more in periods of just a few weeks, many people were wondering why VeChain is even in the question, considering that many smaller cryptos are pumping and offering such huge gains. And so today I wanted to make a video sharing my thoughts on the subject, and remember that I'm sharing my personal thoughts and opinions, and so this video is not financial advice. Also, if you're not yet subscribed to our channel, you're missing out on free monthly crypto giveaways, and all you have to do to be entered is subscribe and turn on post notifications. So the first point which I want to discuss is that these comments aren't necessarily wrong. There are crypto projects which are pumping with huge gains, and while there's nothing wrong with only looking at the gain and potential reward, I think that it's very smart to also look at the risk as well. Many of the smaller crypto projects which are experiencing the massive gains are in my view doing so for two main reasons. Number one is the simple fact that they usually have very low market capitalizations and prices, and therefore even a relatively small amount of capital invested can cause huge gains. Gains that would be far less impactful in any larger crypto project with a much higher price and larger market cap. You know, it's far easier for a project with a $50 million market cap to double than for a project with a $50 billion market cap. Because of course one requires a gain of just $50 million in value to double, while the other requires a gain of $50 billion, and in either case the price rises by the same 100%. The second reason is that these crypto projects are widely unknown, not only to the general public but even within crypto circles. Many of these large gainers are relatively unheard of, and so in the same way that they require very little investment to increase in value relative to the bigger cryptos, for the same reasons they also require far less attention to cause a lot of hype in the space. Now, I'm not saying that investing into smaller cryptos is a bad thing. In fact, I think that sometimes smaller crypto projects offer the best value per dollar invested. But having said that, as mentioned at the beginning of this video, we have to look at the risk involved as well. Now, there are roughly 8,000 or so cryptocurrencies out there, and eventually most will have to fail. Because there is no need for 8,000 crypto projects, there may be a need for a few dozen who specialize in different niche areas, but in my opinion there is no need for more than 1 or 2 crypto projects to operate in any area. And let's take VeChain for example. VeChain operate in supply chain management, and they are probably the #1 provider of blockchain tech in this space. And yes, there may be a good reason for VeChain to have a competitor, somebody to keep them on their toes and force competition and therefore fast innovation. But beyond that, I can't see any reason for wanting more than 1 crypto in any given area. The economics just don't make any sense. And so by that logic, most crypto projects will have to fail. And so my personal investment strategy focuses on cryptos which have proven value in the form of customers and partners and so on. And many of the smaller crypto projects which are pumping have no meaningful partnerships or customers, and in many cases they aren't even the market leader in their space, and so they aren't really unique in my view. And therefore the chances of long-term survival in almost every case is nearly zero. And on the other hand, we have projects like VeChain which aren't necessarily very large, but aren't very small either, and who have proven success in the form of billion-dollar companies as partners and even governments, as well as being the market leader in their space. And so while VeChain isn't likely to go 10 or 20-fold in a week, at the same time they aren't likely to go bust once the bull run fades and the market enters its next inevitable bearish cycle, which by the way could happen tomorrow or in 5 years' time, as nobody really knows. And the point which I'm trying to make is that potential rewards in the short term, like huge 1 or 2,000% gains in a week, don't always present the best value for money. For the most part, I'm a long-term investor. I mean, I do a small amount of trading as well, but on the whole, I'm in it for the long term. And so I'm not interested in who's going up next week or next month, and that's why I don't think that VeChain should be underestimated. I'm interested in trying to figure out which projects have the best risk-reward balance for the long term, and I don't think that many of the smaller projects offer very good value from this viewpoint. As while they could double or triple in value, they could also go bust very easily as well. And I always think of the situation as reflecting the business of professional horse race betting. The people who are successful in the long term are those who can balance risk and reward, and not just look at the reward. If a professional gambler were to bet on the horse with the highest payoff every time, they'd be ruined within a week. And of course that's because the horse with the highest potential payoff usually has the most risk involved as well. And this is also true in the crypto market. And in crypto we have so many horses like this that I for one won't even consider any project which doesn't have what I consider to be a reasonable degree of proven value, namely partnerships and adoption and so on. Anyway, that's all for this video. If you enjoyed and would like to see more content like this, then be sure to subscribe. Thanks for watching.